If you have no idea of DeFi and you're totally new to this is the content for you. There's a lot of content about decentralized finance available, but nothing matches the depth and comprehensiveness of what I've put together. I would recommend this as an excellent resource for anyone who wants a comprehensive introduction to DeFi. This content that I'm creating today details the new economies created by a generation of bankless pioneers. It's the best introduction you could ever ask for. So let's talk about centralized and decentralized finance, the traditional financial institutions and what as it currently exists. So much development has taken place in DeFi. DeFi, the acronym for decentralized finance, is currently one of the fastest growing sectors in the blockchain and cryptocurrency space. With increasing institutional acceptance, one may soon see DeFi integrated within traditional financial system in the future. Starting from the late 2017, DeFi gained traction in the wider community during the summer of 2020, and since then has not let off. You're starting to see a lot of protocols in the space innovating. I'll be explaining what DeFi is, how important it is, and the various elements of DeFi, which includes decentralized stablecoins, decentralized exchanges, DeFi lending, DeFi derivatives, DeFi insurance. And in each of these categories, I will provide step-by-step guides to assist you in interacting with at least one of the DeFi protocols. I will share supplementary reading materials that I believe will be useful as you dive deeper into decentralized finance. Okay, let's dive right in. Again, this content is geared towards beginners. If you're an enthusiast who want to delve deeper, I've also created for advanced practitioners with more in-depth analysis. So I recommend beginners start with this content before proceeding to the advanced version. I hope that this content will get you up to speed with decentralized finance. But let's first understand and get into the basics of how traditional financial institutions actually work. Banks, as we all know, are the financial industry's giants that facilitate payments, they accept deposits, and they offer lines of credit to individuals, businesses, and other financial institutions. Banks even finance the government. They're so big that the total market cap of the top 10 banks in the world is over $2 trillion. In April of 2021, the total market cap of the entire cryptocurrency market surpassed $2 trillion. That gives you an idea how large the top 10 banks are. Banks are a vital part of the moving machine that drives the economy. Banks are managed by human beings, and we're flawed and governed by policies that are prone to human mistakes or human-related risks such as mismanagement, corruption, and such. The top 10 global banks as we know it as of 2019, right at the top there is ICBC of China, runner-up China Construction Bank, Agricultural Bank of China is the third one, Bank of China, the fourth one. And the fifth one is JP Morgan Chase, sixth Bank of America, 7 Wells Fargo, 8 Citigroup, 9 HSBC, and 10 Mitsubishi UFJ. China dominates, followed by the US and the UK and Japan. The global financial crisis of 2008 exemplified risk at an insane level. Excessive by banks and governments were forced to make massive bailouts of banks using taxpayer dollars. The crisis exposed the shortcomings of the traditional financial system, and it highlighted the need for a better, fair, transparent, equitable system. Enter DeFi, or decentralized finance, which seeks to build a better financial landscape made possible by technology, specifically cryptography and blockchain technology, particularly in 3 key segments of the banking system. The first one is payment and clearance system, otherwise known as remittance. 2, accessibility. And 3, centralization and transparency. Now let's talk about each one of these. The payment and clearance system, if you've ever tried to send money to someone or a business in another country or across geographical borders, you understand the pain in remittance. Banks globally typically take a few working days to complete and involve all sorts of fees. And to make matters worse, there may also be issues with documentations, compliance with anti-money laundering laws, AML, KYC, Know Your Customer, which are federal laws that have to be abided by these institutions, privacy concerns, and a plethora of issues. Cryptocurrencies that power decentralized finance allow you to bypass intermediaries who take the lion's share of these transfers' profits. We've also seen that with decentralized finance, you can move money in minutes. Your transfers will be processed with no questions asked, with relatively lower fees compared to banks. If you're looking to transfer cryptocurrencies to any account in the world, it will take anywhere between 15 seconds to 5 minutes with a small fee. Let's talk about accessibility. Most of the world is unbanked, and that's billions of people don't have access to banking. To open a savings account, take a loan out for business, make investments, and things like that, they just don't have access to it. To give you an idea, the World Bank estimates that as of 2017, there are over 1.7 billion people who do not own an account at a financial institution, and more than half of them are from poor countries. They mainly come from poor households, and some of their main reasons for not having a bank account is just poverty. They don't have the money. Think about your rural farmer in a developing country, and they also have trust issues with some of these banks, reasons, and valid historical abuse. The World Bank also estimates that 2/3 of the 1.7 billion unbanked population have access to mobile phones. Now, if these people have access to mobile phones and have access to the internet connection, decentralized finance applications, also known as DeFi dApps, can be a gateway for people in that population, in those regions, to financial products, and they can conduct financial transactions without going through lengthy verification processes as required by traditional banks. DeFi acts to push borderless, censorship-free, and accessible financial products for everyone globally. DeFi protocols do not discriminate and level the playing field for everyone. It's commonly accepted now at this point that traditional regulated financial institutions that comply with government laws and regulations are some of the most secure places to park funds, but they're not without flaws. They don't represent everyone. We've seen large banks fail, as in the case of the 2008 recession. Washington Mutual with over $188 billion in deposits, Lehman Brothers with over $639 billion in assets, both failed in 2008. In US alone, over 500 bank failures have been recorded. These are billions of dollars of assets of hard-earned taxpayer dollars. Banks are one of the centralized points of failure in the financial system. The fall of the Lehman Brothers triggered the start of the 2008 financial crisis. So we can draw the conclusion that the centralization of power and funds in the hands of banks, in this case a very small handful, can be dangerous and devastating to millions of people. It needs to change. And the issue of transparency, there's no way for your average investor to know what financial institutions do behind closed doors or in their boardrooms. Some of the events leading up to the 2008 financial crisis could have been avoided if most people knew what was going on behind these closed doors. Some of these institutions have been given AAA rating and approved by regulatory bodies who are supposed to give your average investor confidence in these companies, but then they still failed and lost billions of dollars in taxpayer dollars. DeFi protocols built on top of public blockchains such as Ethereum are mostly open sourced for audit and transparency. They usually have decentralized governing organizations so to control bad actors, and no one particular individual can single-handedly make a decision that can topple the whole thing. DeFi protocols are written as lines of code, and this is math, so you can't cheat it. It always produces the same result. If you enter the same parameters, the right parameters, it will yield the same result. It treats every participant equally without discrimination. The codes run exactly as they are programmed to, and any flaws quickly become evident as it is open for public audit. DeFi protocols rely on decentralized peer-to-peer review. DeFi's biggest strength is its ability to remove middlemen while operating with zero censorship. Now let's compare decentralized finance and traditional finance. Inaccessibility and regulatory uncertainties are some of the major issues that are plaguing the current banking system. Unfortunately, not everyone is privileged to be banked, nor can they compete financially on a level playing field. If you need a perfect example, look no further than the episode that happened with the GameStop, where a bunch of small-time investors decided to buy GameStop shares because hedge fund managers heavily shorted it. Financial applications like Robinhood had to step in and restrict GME trades or GameStop trades because, according to them, they had extraordinary volatility. But when we dig deeper, and this case actually made its way to Congress, and there were hearings, and there's likely to be huge fallout in regulatory changes. Robinhood's biggest customers, Citadel LLC, which is a company that invested in Melvin Capital, which also lost billions of dollars over their short on GME. The DeFi movement is about bridging these gaps and making finance accessible to everyone without any form of censorship. DeFi opens up huge windows of opportunities and allows users across sectors to access various financial instruments without any restrictions on race, religion, age, nationality, or geography. When comparing both traditional and decentralized financial products, there are pros and cons. So we're going to talk about those pros and cons so you can know how to apply DeFi to solve real-world problems. Decentralized finance, or DeFi, is the movement that allows users to utilize financial services such as borrowing, lending, and trading without the need to rely on centralized entities or intermediaries. These financial services are provided through decentralized applications that are built on Ethereum or other blockchains, the majority of which are deployed on the Ethereum platform. While it's helpful to understand how Ethereum works and visualize the ecosystem better, you don't necessarily have to be an expert in Solidity, which is the programming language for Ethereum, to use the tools offered by DeFi. Think of it like you don't need to understand how emails work or the technology behind emails in order to send someone an email or use email. DeFi is not a single product or company, but a range of financial instruments and services which seek to make better and efficient the current traditional financial system. There's innovation happening. Banking, insurance, bonds, money markets, all of that. DeFi, Decentral Applications, enables users to combine all these services in one platform to achieve their desired financial goals. It is often called the money Lego due to composability. For DeFi dApps to work, a collateral locked in smart contracts is usually required. The cumulative collateral locked in DeFi dApps is often referred to the total value locked, which serves as a growth indicator of the DeFi ecosystem. As of 2019, the total value locked in the entire DeFi ecosystem was around $275 million. As of 2020, it's currently at $1.2 billion. So we need to pay attention because this space is growing exponentially. As of April 2021, the total value locked is staggering $67 billion in Ethereum alone, which goes to show how far we have come. It does not even include other blockchain networks, Solana, Luna, Binance, AVAX, and there's more of them that are going to be coming in on scene. The total value locked for all the chains collectively is going to be staggering. You want to be in this space and position yourself. With such rapid growth, it'll be impossible for me to cover everything in this content that I'm creating. Important to note that DeFi in its current state is still very new and experimental. A lot of projects are in beta testing, with many projects rapidly improving each day. As time goes on, DeFi may develop further and look entirely unrecognizable, more like very user-friendly with user-friendly. You see a lot of projects currently with ugly user interface, but as time goes on, those are going to get better, and DeFi needs to get to a place where the elderly or your grandma should be able to use it without any issues.